welcome to the module on Indian banking system key challenges. In the context of Indian banking system, we can see that there has been wide transformation and developments in the international scenario as well as the national scenario of Indian financial system. So in the recent years, there has been a considerable widening and deepening of Indian financial system, and among the Indian financial system, the banking is a significant component. As we see with the years of 1980s and 1990s in the context of Indian economy, with more and more liberalization and financial sector reforms, the allocation of the resources have taken up a greater margin. This is due to the development of money market, the banking sector, and the capital market altogether. So the growing role of the financial sector in the allocation of the resources has a significant potential advantages on the efficiency of the economy. So when we talk about the efficiency of the economy or the financial sector, it is the greater development of the capital system or the financial system that comes in play. When we talk about the Indian financial system, also we project out the consequences of a malfunctioning of the banking sector, because any kind of cautious words or caution regarding the performance is very much needed, because all our efforts should be functioning on financial stability. So the entire financial system of any nation is very much responsible for ensuring financial stability in terms of greater wealth generation and resource accumulation. Moreover, in the Indian banking system, it is said it's important to have a strong and a stable and a resilient banking system. The term resilient is used in wider margin in Indian financial system because how the banking system will be able to absorb the shocks. And with the advent of globalization, both local and global shocks are there, and the banking system must absorb and also try to regulate or mitigate the effect of that shocks. This goes back to the context of the backdrop of Indian financial sector reforms. So this opens up with a question that comment on the backdrop of financial sector reforms, where it says that with greater liberalization, financial system has come to play a more larger role in the allocation of the resources, and now with the advent of the modern technology, with the global forces, this role has become more and more widened. And moreover, the growing role of the financial sector is to identify the advantages that it has on the economy. This boils down to the discussion of the banking structure in the pre-reform as well as later on the post-reform. So when we refer to the pre-reform banking structure, it is referring to the major regulatory constraints, which is looking after the efficiency of the interest rate mechanism, but it has affected the viability and profitability of the banks. Because with the interest rate rising, the cost of borrowing will rise, and thereby the investors will be discouraged. So it is very important to mitigate or regulate the interest rate structure, as well as question on the viability, that is the feasibility, and also one of the most important indicator of banking health, that is the profitability. So in terms of statutory liquidity ratio or in terms of cash reserve ratio, some kind of pre-exemptions are being made. The complex structure of administered interest rate structure used to exist, because it is seen during the pre-reform or before 1990s, the interest rate structure was highly complex. There were multiplicity in the interest rate. Also the SLR and the CRR rates were high. And with the advent of the public sector banks, it has become more regularized. With public sector banks, more shortening and also the rationalization has come in, but they were not operating in the full margin. So before 1990, the functioning of the public sector banks were not up to the mark in terms of the global or in terms of economic performance. Banking regulations also were very much complicated in terms of standards or in terms of multiple codes. So all this made the pre-reform banking structure to be more stringent and complex. Moreover, it is said that with the advent of the globalization, the banking structure in the post-reform era has undergone significant changes. With the adoption of the outward-oriented motto of Indian economy towards global openness and financial openness, the pre-exemptions have been reduced. That means the economy has become more liberal, it was more market-oriented, and the banking players were given a better weightage. Moreover, the interest rates were deregulated. This is a move towards trade liberalization or financial liberalization, because liberalization has been one of the most important policy under the structural adjustment program of economic reforms of 1990s. So with the adoption of the reforms, it is said that interest rates have to be regulated on the basis of market forces without any government dominance or government's role in it. Moreover, the entry of the foreign banks, the private banks, has made more competition, and it made the economy to be following the market forces. The public shareholders' role have increased by the reduction of the government shareholding in these banks. This is because the government is giving space to the public ownership of the asset. This is very much similar to the disinvestment strategy of the public sector units. Allowing foreign direct investment in private sector banks to 74%, and this is basically making the banking sector open to capital inflows in terms of bank equity and bank debt flows. So these are some of the manifestations which the banking sector enjoyed after 1990s. So this boils down to the question how to elucidate the post-reform banking sector reforms. That means how to take an account of this thing in terms of reduction in the exemptions, because this is a major change from the pre-reform. Deregulation of the interest rate, that is one of the most important phenomena taken after liberalization in the financial sector. Enhancement of competition, that is the competitiveness in the banking structure is taken care of. Foreign banks are given a literal entry. Public stakeholders or the shareholders in the nationalized banks are given more impetus. And also the private sector banks, the FDI has been increased to 74%. So basically we can see that the post-reform banking sector reforms have given it a greater wedge over the economy in terms of these policies. Now we come up with the challenges of banking sector as faced by today. Even after globalization, even after coming after 25 years of economic reforms, some of the challenges of the banking sector are very much pronounced. The first one is referring to the changes in the customer service, which has become more globalized and customized as compared to the traditional services. So apart from providing the conventional services, banks are now offering a bouquet of financial services. What does it include? It includes the cross-selling of financial products in terms of the banking products that they come up. Secondly, the concept of branch banking. So basically what we observe that expansion of branch network was there, but now the branch banking comes in, which means the new private sector banks as well as the foreign banks will be given the scope for further business expansion, and that is where the branch banking comes in. So branch banking is basically making more and more banks across the country, widening the financial inclusion, and that is also one of the way out of financial depending on inclusion across the country. Competition. As it is seen that with the entry of the dynamics of global forces, so in order to survive in the increasing pace and extent of globalization, systematic opening up of Indian banking system, banks also want to go for a competitive environment. So this environment makes the banks to operate on in a global manner, and that is how the competitiveness comes in. Along with this, there are some significant challenges which the banking sector actually experiences. These are in terms of low profitability and productivity, lack of integrity, increase of administrative expenses, survival of loss-making branches, and the scandals. So one by one we will take up. First of all, when we refer to the challenges, we also make some elementary changes like lack of professional behavior. This is basically about the talent deficit which has come up in the banking sector very recently in terms of lack of remunerative perks or whatever has been treated in a corporate sector, in that lines, the professionalism or the talent deficit is very much prominent. Secondly, the professional friendly approaches with the customer. This also requires the management or the hospitality at the banking needs. The accumulation of the bad debts which goes to non-performing asset, because this is adding to the liability of the banking sector. Customer-oriented market makes the bank to have more challenges in the near future in order to sell their products in a customized way, addressing to the technical and the proper base, or that is the client base that they talk about. Problem of customer satisfaction. This is because of the customer services that they're making, in what way the feedback mechanism can be taken up more rationalized and a more neutral manner. Depression period running over the country. So after the pandemic, it is seen that the country is slowly recovering from its slow growth phase, and given this transition, it is said that the banking sector initially had to undergo certain challenges and thereby it had to meet up with certain goals. Managing the workforce. This is regarding the workforce that is to be required to be managed. Management of technological advancement. This is the technological base, the dynamics of the technology, all the algorithm which has to be taken up by the public sector banks. So public sector banks basically take care of technology advancements along with the private sector banks, and thereby the banks have to cope up with the recent algorithms or any model of artificial intelligence. This boils down to the question regarding what are the major challenges. So the major challenges mainly comprise of the talent deficit, which is reflected in the lack of professionalism, the accumulation of the non-performing asset, in terms of customer-oriented market, how customer-friendly products can be displayed, and regarding the feedback mechanism, how a unbiased feedback platform can be devised with the help of a portal. In terms of the global slowdown or the slowdown in the economy post-pandemic, what are the challenges or how the challenges can be addressed by the banking sector? Management of workforce calls for a more robust human resource management cell. And moreover, technological advancements also needs to be taken care of. So these are some of the challenges which are taken into consideration. This basically gives rise to the concept of the future prospects. So when we talk about the future prospects of this banking sector, we are going to discuss about the innovative products which can be offered. These innovative products are in tune with basically the dynamics of capital market. For example, the demat accounts, for example, the fiat money or the credit card or the plastic cards, the plastic money that we talk about, any kind of insurance products which can be debenture, which can be equity, which can be derivatives, which can be produced in this regard. Secondly, in order to address a larger customer base, in order to go for a better financial inclusion, the Reserve Bank of India is currently appointing some of the business correspondents. So they are being located across the regional groups of the country, across the remote areas, so that they can create banking awareness, banking campaign, in order to motivate them to adjust with the banking behavior, opening up bank accounts under the notion of door-to-door service approach. So these business correspondents are appointed by the central bank who needs to be regularly monitored about their functioning. Customer relationship management should come up on a better portal through a better delivery system so that both the beneficiaries and the providers are getting well off. Professional approaches must be devised in terms of opening an account, in terms of transfer of the payments and any kind of financial transactions being done. Managerial excellence is at the top of the important prospect because this calls for foreign technology. This calls for capital-intensive mode of how we can attain managerial excellence, not only in terms of skill formation, but also in terms of better banking infrastructure. Moreover, the future prospects also lies in the marketing and technological advancement. By marketing, we mean the marketing of the banking products, the insurance products, and how they can cope up with the modern technology. The customized and the cyber services should be taken care of. That is the entry of global supply chain or the entry of technological models which can be adopted by the banking sector. Branch expansion is always required or always mandatory to actually explain the global outreach of the banking sector. Deposit mobilization in terms of different kind of products or mutual funds or derivatives when it can be invested. The management of the non-performing asset is the need of the hour because that is how the risks can be taken up. The reconstruction of asset, to identify them as good, bad, and even the sick assets, that also takes to be taken care of. And moreover, the motivational human resource management policies for the banking personnel or the banking employees in terms of different benefits or in terms of promotion and also in terms of increments. That goes for motivational HRM policies. With the advent of the globalization in the financial sector reforms and with the changing dynamics in the banking structure, some major issues are arising in this context. One of the major issues arising is the concept of corporate governance. So by corporate governance, we mean that banks not only accept and deploy large amount of uncollateralized public funds in the judiciary or fiduciary capacity where the funds are being transacted, but they also leverage such funds to credit creation. That means the concept of credit creation is linked with the creation of the funds and how the funds can be attained or can be disbursed at the needs of the stakeholders. Banks are also important for smooth functioning of the payment system. This also takes care of the governance at the administrative level in terms of monitoring, regulation, and also proper auditing. This calls for the functioning of the payment system where the profit motive cannot be the sole criteria of the business decisions. This also takes care of institutional framework, a robust regulatory body to look after its functioning, and thereby the implementation can be done. Moreover, when we talk about the challenge to the banks, where the priorities and incentives might not be well balanced by the sound principles of corporate governance. So because in the banking policy, all these type of targets may not be mentioned in plain paper, but this has to be imbibed within the process of the banking operations. That is targeting the priority of improving the banking infrastructure, the banking profitability, and as well as the creation of the funds, and along with taking care of the smooth functioning of any payment portal. So the focus will be on enhancing and fortifying the operation of the principles of sound corporate governance. So in terms of the smooth functioning of the banking sector or of any economic activity, there is a need to have a proper corporate governance model. So this corporate governance model will look after the regulation, the supervisory functions, and also the auditing standards of these bank accounts. This takes care of the public funding, how the channelization of the funding can be done, and how we can go for a more improved and sophisticated payment system. This takes care of the priorities and the incentives that are being laid down, and thereby the corporate governance can take up a bigger role. Moreover, when we consider of the governance part, we go for the branch banking. This also refers to the RBI policy on appointing the business correspondents. So what we mean by branch banking, that is basically expanding the bank branches across the country. So traditionally, banks have been looking to the expansion of their branch network in order to expedite their business and go for a large scale. So the new private banks as well as the foreign banks have been able to achieve business expansion through other means. That means with the advent of the foreign banks and the private banks, they've been opened up different franchisee, the mergers and acquisitions have been taken place, and moreover this expansion has been one of the most important component of the banking network. Banks are examining the potential benefits that may accrue by tapping the agency arrangement route and outsourcing route. So by agency arrangement route, it means how it can keep a liaison with the commercial banks and in turn with the central bank, and also outsourcing in terms of the foreign funds, in terms of the exchange of the foreign funds through the global mechanism. And that is how the potential benefits of the banks can be tapped. So in all of these directions, banks wants to take care of the risk, and so the risk management is one of the most important concern of any corporate governance model, which is also associated with the outsourcing. So in this place, the branch banking has to put up appropriate strategies and systems so that the risk management can be done and the overall banking health can be improved or efficiency model can come up. This also gets into the consideration under the concept of banking system is the KYC or Know Your Customer guidelines. So these guidelines are revisited in the context of recommendations made by the Financial Task Force on Anti-Money Laundering Standards on combating the financing of terrorism. That means any kind of scandals or scams which are associated with the banking sector, particularly in the money laundering or any other unfair activities, how these KYC rules can be sophisticated and how it can be implemented in place. So compliance with these standards, both by the banks and the financial institutions, country has become necessary for international financial relationships. And that is how the country has become an active member in the global forum. So compliance issue is there along with the corporate governance is a significant challenge to the entire banking industry, particularly in terms of misuse of the funds, which is very much there in the cyber world in terms of the cyber security norms must be stringent. So there should be a call for a better solidarity, a call for a better financial integrity of the Indian banking system to the international community. So this brings down how the foreign banks as well as the domestic banks as well as the global networking banks can be in place along with the banking regulations, banking integration and banking solidarities. This also takes care of the norms that are being laid down by the banking guidelines. So this gets down to the questions on what are the major issues arising in the banking sector. So the issues basically refer to corporate governance, to the number of banks that has to be expanded in terms of branch arising or the branch expanding, and also implementing the proper KYC guidelines to take care of the standards and the improved norms. There are certain financial sector agents which are instrumental growth in this banking sector. So they are the regulators, mainly the SEBI, the RBI, the banking system, that is the entire banking system, how it works, the non-banking financial companies, that is NBFCs, like the Muthoot Finance or the HDFC funds, the capital market that comes in, and definitely the mutual funds which are very much along with the other derivatives. So in this particular module, we basically focus on the concept of the banking sector, how the banking sector has evolved over time with the advent of the pre-reform and the post-reform scenario. Because in the pre-reform scenario, the economy was highly restrictive with inward orientation, lots of restriction in terms of multiplicity in the interest rates, complex administrative structure, and multiplicity in the allowance and also in the approvals mechanism. But with the advent of the globalization and the liberalization in the banking sector, deregulation of interest rate has come up, streamlining has come up in the rationalized manner, single window clearing system is proposed, and the advent of private sector banks and the foreign banks made the economy to be more liberal. And thereby, the non-performing asset, the concept of mergers and acquisitions have come up, which will mitigate the burden of the bad debts. However, the banking sector is exposed to a lot of challenges. These challenges are both domestic and international. Among the domestic challenges, we have the concept of lack of professionalism, lack of capital market adequacies, and also in terms of the talent deficit. Along with large number of debts may also pose a problem at times. In order to address the challenges, the future prospects lies in opening up more branches, also taking care of the KYC guidelines, and moreover in terms of international standardization. So among the major issues we can see the corporate governance, we can see the opening up of the branches as a result of banking inclusion and banking deepening, and some banking sector norms to be revisited. In order to get up a strong banking structure, the major agents who will transform the process are mainly the instruments that will take up, like regulators, banking advisors, the bodies, the mutual funds, the derivatives, and other NBFCs which are in place. Then only the challenges of the banking sector can be addressed through proper reforms and policy framework.